Hello, this is Lane Dungan, market strategist at RJO Futures. Today we'll be covering grain market commentary. Let's first get on to price action. May corn closed lower today at 443 and 3/4, down 2 1/4 cents. May soybeans closed at 1169 and a half, down 1 cent. And wheat closed today at 568 1/4, down 5 3/4 cents. Let's go into the fundamental calendar we're going to have coming out this week. Monday we had weekly inspections as well as fats and oils and grain crushing. Tuesday, no reports. Wednesday, we had EIA energy. Thursday, export sales. And then Friday, commitment of traders. Along with this, we did have a flash sale, the first one of the week. This week, we had 196,000 metric tons of corn heading to an unknown destinations during 2025-2026 marketing year. Now into the EIA energy, a little dip and lower than expected. The trade believed that we were going to have higher production this week. Production came in at 1.095 comparative to last week of 1.113. Stocks came in higher at 26.3, and last week we were at 25.6. I believe this is what really controlled the trade today, other than Iran conflict. But I believe this was the main driver in the dip, just because expectation was to continuously see this bullish production number. Now into corn technicals. Let's cover a little bit of what happened last week. We saw a lot of rallying markets and just continuously closing higher and higher. We beat the 50% retracement line on the USDA lows presented in early January, and we're pushing back to that consolidated lows of that consolidated range where we were through December and November. With this being said, today we did see a down day, a large lower candle down, but we ended up trading higher off that. We touched 440 or ish, 440 1/4 at one point today was our low, and then trade back to 443 3/4 based off that. Now let's talk about Tuesday's market real quick. A large range day in itself. We traded higher most of the day, and then just slowly ticked back down. With that being said, I'm still bullish on fundamentals for corn technicals, but we're going to have to see where this really unfolds with ag futures as a whole, with Iran being in conflict. We'll just kind of cover that briefly. Is the main driver in maybe ag markets right now is a lot of geopolitical with, deals with China and just not an ag market specifically. We're looking at dollar prices, energy prices. Really, most things are affected by this conflict, as a huge negotiation that we've been having lately is with China, and that's really across all ag markets. And this deal really kind of pushes crude towards everywhere but China. So we could see some different negotiations based on that. We'll look at that a little bit more in soybeans. But that's something you have to understand, is that, you might be seeing all these great bullish fundamentals and ag technicals. But as a geopolitical standpoint, we're seeing a lot of mixed markets. And really the energy market is taking a lot of this into effect also. One market that's not talked about a lot on here, but is the fertilizer pricing market. And majority of the global fertilizer goes through the kind of Iran, and that's straight presented there, and that's being shut off currently. So that's a great backhaul for soybean vessels heading to China and in that area. So we're going to see maybe some slowdown of that. But let's go into soybeans and kind of present what we have there. So we're still seeing a great channel higher, even with the down day today. But really a great technical outlook for the bulls out there. We're looking at 1166 1/4 right now. Last week we broke the 1180 mark. I believe we're going to keep pushing higher. And with this carry in the market right now, we can suspect that we're going to see more bullish trends into the $12 mark from here. Now to more talk about how Iran and the conflict over there is going to affect the soybean market, and I covered that a little bit a second ago, but more of how China is getting cut off from this crude supply, and now this is just analyst belief, but that's more of the pushback there, in the minds of the traders is if China is not going to receive their negotiations on this end due to the U.S. being a part of the conflict, they might have an issue supplementing the deal of the 8 million metric tons agreed upon in the short term here from China. With this also covered, we're going to look at we're having good numbers coming out of technical market, out of U.S. grain, but we're going to have to pivot more towards South America and Brazilian crop. Expectations continue to rise on that, and we're seeing, a lot of cargo shipments heading out of there directly. Also, the big driver of yesterday's market was Trump and China's President Xi having a discussion and going to be talking again at the 1st of April more about these markets, and I believe China soybeans are going to be mentioned a lot in that conversation. Now for wheat technicals, we saw a large dip just 2 days ago now, and we also saw a large increase on Friday, and we're right in the heart of wheat markets when we're talking about this Iran conflict, especially with connections on that area. We're talking with India and Black Sea region also, where there was a lot of trade negotiation going on of more wheat production heading down to India. This is obviously going to be slowed and maybe put to a halt due to the conflict occurring. But I also put a few notes on the board real quick to check out Europe. Wheat exports are expected to be lower, and plant reports to be shown steady wheat. Planting is continuously going on in the Plains region, and we're having steady increase. With that being said, we are seeing good demand out of U.S. wheat, and production numbers are on schedule, which is great to see. But most of this market is tied to Middle East and the Iran conflict right now. Now, we talked a lot of strategies on a short time here, but if you want to have these strategies given to you more in depth, I create a market commentary newsletter every day and spread recap to look over spread markets. Those cover corn, soybeans, wheat, and soybean oil and soybean meal. Give a 15-year average on where those markets tend to lie anyway. Great tool to have as a hedger or a speculator. You can receive this information from me at ldungan@rjobrien.com or give me a call at 312-373-5366. I also post quick market updates on Twitter or X at Lane Dungan. So feel free to check me out on any of those platforms. I'm going to continuously post information on there, try and get to you as fast as we can so you're up to date and informed on this market. Regardless, thank you for listening in today, and if you have any questions on strategy, give me a call at 312-373-5366 or reach me at ldungan@rjobrien.com.
The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results.